Look at this case law. This we have discussed in the previous lecture. Previous lecture we have discussed this case law, intention of resale. Now look at this. Resale after short gap. Resale after short gap. Where the assessee company purchased large areas of land and buildings from the government with borrowed funds. Interest on such funds was, the assessee company borrowed amounts with the government for borrowed funds. Interest on such funds was much higher than the income from the said properties, and sold part of the said properties within a short time of their purchase. It was held by the court that the purchase and sale was an adventure in the nature of trade. Okay, so borrowed funds, purchased land and building, okay, rental income collected, and that rental income is less than the amount of interest, and that rental income is less than the amount of interest. Okay, so first point, what? Borrowed funds. Borrowed funds, what happened in that case law? Borrowed funds, purchased building, purchased building, purchased building, collected rent, collected rental income, collected rental income. Okay, repaid interest on borrowed funds, paid interest on borrowed funds, paid interest on borrowed funds. Okay, interest on borrowed funds, which is more than rental, which is more than rental income, which is more than rental income, which is more than rental income. Now we should ask the question: if the rental income is less and borrowed amount is more and interest expenditure is more, why any fool will do? Why any normal person will do? Any rational person, any intelligent person, a common sense person will not do like this. Because rental income is less than the interest on borrowed funds, then why I have purchased? That means there is clearly an indication that you are supposed to sell. You are, even though your rental income is less, even though our interest expenditure is more, but still we have purchased the building. What would be the logic? What would be the logic? Obviously the logic would be to sell at a profit. Even though I am getting revenue loss, I'll get capital gains profit. That is my objective. Okay, even though I am losing the rental income, even though I am getting a less rental income, I got an intention that I have to sell the property. Therefore I get the interest. That is the reason I am compromising this. Otherwise, why any fool will pay more interest on borrowed funds and he will collect less rental income? Because he has an intention in mind that if I sell this building, I'll get more profit. Therefore, today I am paying more interest expenditure. Okay, that means the purchase is made with an intention to resale. Purchase is made with an intention to resale. Okay, sold short span of time, sold part of the said properties within a short time of their purchase, sold part of the said properties within a short time of purchase. Why? These two factors: interest on borrowed funds are higher than the income from the properties, and sold short part of the properties within short time. Okay, these are the two factors. These are the two factors which are favoring that assessee has an intention to resell at profit. Assessee has an intention to resell at a profit. That is the reason he won the higher interest expenditure. That is the reason he paid the higher interest expenditure. Okay, and he sold the property in short span of time. And he sold the property in short span of time. Because of these reasons, court concluded that it is a business income, not a capital gains income. It is a business income, not a capital gains income. Okay, so these are the two supporting factors. These are the two supporting factors: interest higher than income, interest higher than income, sold within short time, sold within short time of purchase. So these two factors are favoring that assessee has an intention to resell at a profit. Therefore, it is a business income. Therefore, it is a business income. Okay, right. So I have go through all the important case laws, at least important landmark case laws. Okay, right. Next, sale of intellectual inherited property. Very important case law. Look at the sale of intellectual property. Okay, where assessee inherited land and sold plots received in lieu thereof. It was not a case of adventure in the nature of trade. Court said that inherited land and sold, land inherited, later sold, land inherited, later sold. The court said it is not an adventure in the nature of trade. It is not a trade at all. Why it is not a trade at all? Because for an adventure in the nature of a trade, purchase and sale both are important. Purchase and sale both are important. Here in this case, purchase was missing. I have not purchased the property. I got the land I got as an inheritance from my parents. Land I got as an inheritance from my parents. Therefore, it is not a business income. Land I got as an inheritance from my parents. Therefore, it is my business income. It is not my business income. Okay, because there is no purchase. Business means always there is a purchase or production. No, sir, I have not purchased. I have produced. Okay. At least production should be there. Here, no production, no purchase. No production, no purchase. Therefore, it is not a business. It is not a business. Do you understand, ma? One of the essential basic requirement for a trade is purchase and sale. Basic requirement for a trade is purchase and sale. Here, the basic requirement of purchase was missing. Purchase was missing because the property was inherited. The property was inherited. Okay. So ancestral property manaku vachindi. Manam purchase cheyaledu. Purchase ane concept వెళ్ళినప్పుడు business రాదు. Business అనే వర్డ్ రావాలి అంటే purchase సేల్ ఉండాలి. ఓకే, ఇక్కడ సేల్ మాత్రమే ఉంది, purchase లేదు. Therefore it cannot be called as a business. It cannot be called as a business income. Okay, right. Next, isolated transaction outside normal business. Look at this. This is also one of the contradictory evidence. This is also one of the contradictory evidence. Okay, isolated a transaction outside normal business. Okay, assessee firm doing business of jewelers purchased land for the purpose of building houses for partners and sold 6 years later due to the unhealthy conditions of locality. It cannot constitute an adventure in the nature of trade, especially when land is not ordinarily a commercial commodity. Okay, normally land is not a commodity, ordinarily tradable commodity. It's an investment. It's an investment. It's not an ordinarily tradable commodity. The mere fact that some profit was made in the transaction would not, without anything more, to indicate that the intention of the firm was to trade in the landed property. Okay, so here the concept is what? Assess normal business is jewelry. So unusual transaction is a purchase and sale of land. Intention of purchase is okay, right? So here the first point. Okay, what is our normal business? What is our unusual transaction we have entered? Our normal business is we are into jewelries. Okay, but suddenly we bought some land. Whether that land is treated as our business income or not. Whether land is treated as our business income or not. Okay, right. Look at this. Okay, regular income, ordinary business, regular business. What is our regular business? What is our regular business? Jewelry. Okay, our business is regular business is jewelry. Okay, what is our unusual transaction? Unusual purchase. Unusual purchase. What is our unusual purchase? Land. What is our unusual purchase? Land. So here, just because whatever we have purchased is not relating to our business, we can't say that it is not business. Okay, regular our business is jewelry. Okay, no problem. So what we have purchased is land. What we have purchased is land. So what is the purpose of purchase? Intention of purchase is what? Intention of purchase. Intention of purchase. So why we have purchased the land? Why we have purchased the land? Tell me. So the purpose of the purchase is, the intention of purchase is to sell, to construct houses for the partners. To construct houses for partners. Okay, to construct houses for partners. To construct houses for partners. Okay, to construct houses for partners. Regular business is jewelry. Unusual purchase is land. Intention of purchase is to construct houses for partners. To construct houses for partners. So therefore, the court said profit was made. Some profit was made, but that is the only thing. Profit motive, earning profit is one of the essential features of a business. It is not the only feature of a business. Earning profit is one of the essential features of a business. It is not the only feature of a business. Therefore, nothing, without anything more, anything more. Fact that some profit, we have made some profit, but there is no other factors. There is no other factors to support that it is a business transaction. There is no other factors to support that it is a business transaction. Therefore, court held that it is not an adventure in the nature of trade. Okay, not an adventure. Okay, court said that not an adventure in the nature of trade. Okay, court said judgment. Okay, judgment, not an adventure in the nature of trade. Okay, judgment. Judgment, not an adventure. Not an adventure. Why? Because sir, it is an unusual transaction. Okay, profit made, but the intention is not to resell. Intention is not to resell at profit. Okay, right. Look at the second case now. Look at the second case now. The fact that the assessee was at the material time a landholder of a large estate. That means his regular business is dealings in land. Regular business is dealings in land. Look at this case now. Regular business is dealings in land. Okay, unusual purchase. Suddenly what he purchased was shares, securities and bullion. Shares, securities and bullion. So shares, he purchased some shares, bullion. Shares and bullion. Okay, what he purchased is shares and bullion. What is the intention? To resell at a profit only. What is the intention? To resell at a profit only. He is a businessman. He is an opportunistic person. Whatever the business opportunity is there in the market, he will try to encash it. Whatever the business opportunity is there in the market, he will try to encash it. Therefore, he is a business person. Just because till now he was dealing with land, suddenly he purchased the shares. You cannot say that purchase and sale of shares is the capital gains transaction. No, sir, his regular business is land dealing, sir. Suddenly he got some purchase, he got some shares. How can I say it is his ordinary business? It's a capital gains transaction. No, no. He was not restricted to one particular business. He was not restricted to one particular business. Businessman is always opportunistic. Whatever the business opportunity in the market is there in the market, he will try to encash it. Okay, he may be doing multiple business. He may be doing multiple business. You cannot say that businessman should stick on to only one business. You cannot say that businessman should stick on to only one business. Okay, I am a vendor. Today I'll sell mangoes. Tomorrow I'll sell mobiles. That's it. Okay, therefore, could not be transactions in the nature of trade. Okay, the fact that the assessee was a landholder could not be transactions in the nature of, and bullion, they had therefore to be examined in the light of all facts and circumstances to ascertain whether they have been entered in the pursuit of trading activity or not. Okay, right. Something is missing. No, would not mean that these transactions, okay, would not mean that, okay, would not mean not trade, not transaction. Double time they are used negative, not, cannot be treated as not trade, cannot be excluded from the definition of trade, cannot be excluded from the definition of trade, cannot be excluded from the definition of trade. That means, so what the intention of purchase is to resell at a profit. Okay, to resell at a profit, to resell at a profit, to resell at a profit. So what the court said is cannot be excluded from. So even though what we have purchased is not our routine commodity, not our routine business. We have done some new business, but still it is a business. We have done some new business, but still it is a business. That's it. Okay, whether it may be relating to our existing business or not, cannot be excluded from adventure. What is meant by cannot be excluded? That is, can be treated, shall be treated as adventure. Okay, shall be treated as adventure. Shall be treated as adventure. Cannot be excluded. Cannot be excluded. They have court judgment has used two negatives. More, we should be careful. Court judgment has used two negatives. Cannot be excluded from adventure. That is, shall be treated as adventure. That's it. Okay, in both the cases, the similarity is that our regular business is something and what we have done is something else. Our regular business is something and what we have done is something else. Here the court said not an adventure, not an adventure, green signal. Okay, it is not an adventure, green signal. Okay, whereas it is an adventure, red signal. It's an adventure. Court said no boss, it's a business income only. No boss, it's a business income only. Okay, right. These are the points. No boss, it is a business income. Cannot be excluded from adventure. That is, shall be treated as an adventure. Shall be treated as an adventure. Okay, right. These are the points. Next. So contradictory case judgments. Now look at this. One more case like that. Where the assessee carrying on business of agency of cloth. His regular business is cloth merchant. What is his regular business? Cloth. Okay. What is his regular business? Cloth. Cloth merchant. Unusual purchase. What he purchased is a silver bar. Bars. He was purchased silver bar. Okay. He was purchased silver bar. Look at this. When the price of silver was going up, normally he was a cloth merchant. Normally he is a cloth merchant. Suddenly he purchased some silver because he observed that silver price is skyrocketing. Because he observed that silver price is skyrocketing. Therefore he purchased the silver. Therefore he purchased the silver. When the assessee was paying interest on money borrowed, okay, he was borrowed money, paying interest and purchasing the silver. Why? Only to sell at a profit, because his regular business is cloth, but he purchased the silver to sell at a profit. He is a businessman, opportunistic person. Therefore, it is a business income only. Just because it is not related to my regular business, don't conclude that it is not my business income. Don't directly put in the head capital gains. This is the biggest biggest mistake done by majority of the people. This is the biggest mistake done by majority of the people without reading the past case laws. If something is done which is not related to my existing business, they will blindly put it as a capital gains. No, they will blindly put it as a capital gains. No, even though in all these three cases, my regular business is different and my unusual purchase is different. So intention to resell, intention to exploit the rising prices, intention to exploit rising prices. Okay, therefore is treated as an adventure. Was held that said transaction was an adventure. Okay, it was treated as adventure. Okay, the said transaction, the court treated the transaction as an adventure. Treated as adventure. Okay, the court treated the transaction as an adventure. The court treated the transaction as adventure. This is what the point. Okay, look at this point. To call a transaction as an adventure, it is not necessary that it should be related to assessee's existing business. This is a judgment. Okay, so even in these three cases, In the first case, okay, it is not related. You have not said it. We said it is not an adventure. But in these two cases, we said that even though our transaction is not related to our existing business, still we can treat it as an adventure. Don't argue that. Sir, this transaction of silver, this transaction of shares is not related to my existing business of cloth or landing. Don't argue that. That is not a valid argument to escape from the business head of income. Okay, so the argument that the transaction is not related to my regular business is not a valid argument, is not an acceptable argument to escape from the business head of income, to escape from the business head of income. So this is what this case law says. To call a transaction as an adventure, it is not necessary that it should be related to associate's existing business. My existing business is cloth. I purchase silver. Don't argue that it is not related to my existing business, therefore it's a capital gains transaction. No, it is a business income only. It is a business income only. Okay, businessman is an opportunistic person. Businessman is an opportunistic person. Whatever the opportunity prevails in the market, he will try to exploit it. Whatever the opportunity prevails in the market, he will try to exploit it. Okay, businessman is an opportunistic person. Next, right? So, but here the important point is, when the business is related, when the business is not related to, when a transaction entered by the assessee is not related to my business, the assessee is safe, because the burden lies on the income tax department. The burden lies on the income tax department. Okay, if a transaction entered by the assessee is not in regular line of business, then the burden lies on the income tax department to prove that such transaction comes under adventure. Okay, in these cases. So in these two cases, assessee can argue that it is not my adventure. If the income tax department is able to prove that it is an adventure, then okay. If the income tax department fails to prove, then assessee will win the case. That means assessee has no burden of work, no pressure here. Assessee has no pressure. All pressure lies on the income tax department to prove that it is an adventure in the nature of trade. In these two cases, all the pressure lies on the income tax department. Assessee is sleeping with lot of peace of mind. It is not related to my business. Okay, my argument is not that it is not an adventure. If you argue that it's an adventure, just prove it. That means the burden of proof shifts. The burden of proof shifts from from the assessee to the income tax department. Okay, here the burden of proof is on the income tax department. The burden of proof is on the income tax department. When the transaction is not in the regular course of business, the burden of proof is on the income tax department. Okay, right. Next, individuals versus companies. Individuals versus companies. So whatever the criteria we will use for individuals is not the same criteria for companies. The aspects to be considered to determine whether a transaction is a business or not. The criteria for individuals, the criteria applied for individuals is different, and the criteria applied to the companies is different. Okay, the criteria applied to the individuals is different, and the criteria applied to the companies is different. The considerations which apply in the case of individuals in the matter of determining whether the activities constitute a business within the meaning of inclusive definition may not apply in the case of an incorporated company. Okay, so considerations, whatever the criteria we'll use, considerations here means criteria. Considerations here means criteria. Considerations here means criteria. The criteria applied to individuals to determine whether a transaction is a business or not, that criteria will not apply to companies. Okay, the criteria applied to the individuals to determine whether a particular transaction is a business or not, that criteria will not be applied to the incorporated companies. In case of incorporated companies, memorandum also has to be studied. For an individual, there is no memorandum of association. For an individual, there is no memorandum of association. In case of companies, there will be a memorandum of association. Therefore, we have to read the memorandum of association. In case of companies, we have to read the memorandum of association. Okay, look at this. Even though the activities, if carried on by individuals, might constitute business in that sense, they may not constitute business for companies. Same transaction, same circumstances. If it is for the individuals, it may not be a business. It may be a business. For company, it may not be a business. Okay, individuals might constitute business, companies might not constitute business. Same transaction, same circumstances. If the assessee is an individual, it may be treated as a business. If the assessee is a company, it may not be treated as a business. Therefore, we have to be very careful. We have to be very careful while deciding whatever the case laws given for the individuals. Don't blindly apply the case laws for the companies. Whatever the case laws used for the individuals, don't blindly apply those case laws for the companies. Okay, so for an individual, that transaction may be a business. But for the same transaction, same circumstances, just because the assessee is changed, it cannot be treated as a business. Okay, might not constitute business. Okay, right. So in case of a company, we have to inquire what are the objects for which it has been incorporated. That means memorandum of association. In case of companies, memorandum also should be studied. In case of companies, memorandum should also be studied. For an individual, no MOA. Therefore, what, based on the transaction, based on the circumstances before the transaction, based on the circumstances after the transaction, based on the assessee behavior, will conclude whether it is a business or not. But in case of a company, in addition to the circumstances, we have to read some document called as MOA. Okay, memorandum of association, objects clause. Therefore, the criteria applied for individuals is different, and the criteria applied for companies is different. We cannot blindly follow the same case laws given for individuals for the sake of companies. Okay, for companies, we should be careful. Past case laws, whether they are related to individuals or companies. Past case laws given in favor of individuals may not be blindly applied to the companies. Okay. Next, look at these two contradictory judgments. The purpose or the object for which a company is incorporated, okay, may have some bearing but is not decisive. That means objects of MOA have some bearing. May have some bearing means may be relevant, may have some relevance, may have some relevance. Okay, may have some relevance, but not decisive. That means not sufficient. Okay, but not conclusive or sufficient. That means objects clause in MOA is relevant, but that is not sufficient. Based on that alone, we cannot give a judgment. Okay, to give a judgment, court will consider many points. Out of that, one of the point is objects in MOA. But court will not give judgment only based on the objects in MOA. Court will look at some other circumstances also. Therefore, objects clause of MOA is relevant to determine whether a particular transaction is business or not, but that is not sufficient. In addition to the objects clause, we have to read the other circumstances also. Okay, objects clause of MOA, objects in MOA is relevant but not sufficient. Or conclusive. Okay, based on that only, based on objects clause alone, we cannot decide. Whether a particular transaction is a business or not. Okay, right. That is what the point. May have some bearing, but it's not decisive. Okay, may have some bearing means some relevance. Not decisive means not sufficient or not conclusion. Look at this. Just because a transaction entered by the assessee company is not permitted by MOA, it cannot be excluded from the definition of adventure. Here, the fact that a transaction is within the powers of a trading company is relevant, but as a standing alone has not much significance. The difference between these two case laws is that in this case law, the transaction entered by the company is not permitted by MOA, but still it is treated as a business. Okay, look at this. In this case law, transaction entered by company is not permitted by MOA, but still treated as a business. Not capital gains or other sources. But still treated as a business, not capital gains or other sources. This is one case law. Transaction entered by company is not permitted by MOA, but still treated as a business. Okay, next case law. Transaction entered by company is permitted by MOA. Okay, but not treated as a business. This is what the point. Therefore, some people has wrong conclusion that if whatever the activity done by the company is covered in the memorandum objects clause, it is my regular business. If it is not covered in memorandum objects clause, it is my capital gains transaction, unusual transaction. No. Sometimes even though it is not covered in MOA, there is a chance of treating it as a business. Sometimes even though it is permitted by MOA, there is a chances of exclusion. Therefore, objects clause in MOA is equal to business transaction, not correct. Objects clause in business. Okay, objects clause in business is equal to business transaction, not correct. Okay, this is a blunder statement. Objects in MOA not equal to business transaction. Don't equate that. If a transaction permitted by the if a transaction entered by the company is permitted by employee, that is not sufficient to call it as a business. Okay, just because a transaction is not permitted by objects law, that is not sufficient to call it as a capital gain. Okay, both are opposite. Here transaction entered by the company is not permitted by employee. So normally people will think it as a capital gains transaction, but the court said no, it is a business transaction. Here the transaction entered by the company is permitted by employee. So normally people will think that it is a business income. People will think that it is a business income, but the court said no, it is not a business income, it is a capital gains income. Okay, these are the judgments. These are the careful points we have to observe. Okay, we cannot blindly, MOA is relevant, but based on the MOA alone, we cannot give a judgment. Based on the MOA alone, we cannot give a judgment. Okay, ma? Right. So in case of companies and individuals different, MOA should be verified. Next, look at this. Property acquired in the course of business need not necessarily be part of a business. Here, an assessee was doing money lending business. Here, the assessee was doing money lending business. So assessee has given loan to some person. That person has defaulted. Therefore, assessee seized some immobile property from that person. Okay, that immobile property is held by the assessee for some time period. Thereafter, assessee sold that immobile property. The court said it is not a business income. Even though it is related to my regular business, but it is not a business income. Even though it is related to my regular business, but that is not a business income. Okay, look at this here. Okay, assessee's regular business is what? Money lending. Okay, assessee regular business, money lending. Assessee regular business, money lending. Assessee lent money to a person. Okay, assessee lent money to a person, money to a person. That person gave the property as a security. That borrower gave some immobile property, as security. Okay, that borrower defaulted in loan. Okay, that borrower defaulted in loan. Okay, that borrower defaulted in loan. Okay, money lender handed over the property. Money lender taken the property. Taken the property. That assessee hold that assessees hold taken the property. Assessee money lender holded the property. Okay, taken the assessee hold the property for some time. And received the income for some time and received the income. Assessee sold the property. Later on, assessee sold the property. Later on, assessee sold the property. Okay, later on, assessee sold the property. Now the court judgment is that court held that it is not a business income. Court held that it is not a business income. Held that the sale of immobile property acquired in the course of normal business, is not a capital gain, is not a business transaction. Okay, so some people are arguing that, sir, it is a regular activity. Money lender means he will take the assets and he will sell it. But the court said it is not his business income. We have to compute separately it as a capital gains income. Okay, look at this point. Therefore, subsequent profit or loss arising on resale of such property is profit or loss of capital invested in purchasing the property and not of capital invested in the money lending business. Okay, that means that part of the money invested in the property is different and that part of the regular other activities are different. Therefore, the court said it is not a business transaction. Many people have mistaken that they have treated it as a business income. Because that is my regular business, sir. Money lending means the same thing. I'll give the money. If somebody defaults, I'll seize the property and sell it. That's a capital gains transaction. That's a capital gains transaction for me, not a business transaction. That is a capital gains income, not a business income. Okay. So these are the important case laws relating to the business. There are more than 50 case laws, but I don't want to spend too much time on the class for the case laws. Therefore, I have taken only important case laws, hardly 5 to 10 case laws, important case laws. At least those case laws we have to read. In the next lecture, we'll start the definition of the word profession. Okay, we have covered profits and gains. We have covered business. In the next lecture, we'll cover this definition called as a profession. Okay, thanks.